Good morning, good evening, everybody. I'm Atul Vashist, and I'm the chairman of Neo Group. Thank you for joining us today, and thank you for joining us for this webinar that's focused on supply risk management. Before I begin, for some of you that may not be familiar with Neo, I'll spend a little bit of time just talking about Neo, but really this webinar is about risk management, and so we'll jump into that. I encourage you to ask questions. So if you have anything on your mind as we go through this, please ask those questions through the question tab on your control panel. Also, we will be conducting a poll about 4 questions in all that I hope you'll also answer as we go through this. Truly, as we look at the scale of operations that companies have today globally, particularly as we look at the global sourced operations that they have globally today, whether it's with a supplier and or their own global in-house captive, we're noticing that both the supplier or the global in-house center has certain inherent risks associated with them. At the same time, those risks are impacted also by the location risk. And that is not something people have thought about as much. So today's conversation, when you think about supply risk management, I want you to think about not just suppliers, but also location. So let me begin by just giving you a little brief background on Neo so you know the context of where I'm coming from. So Neo is a company that was founded back in 1999 with the sole purpose of helping clients benefit from global services and global sourcing. And that is what the company has done since 1999. The focus has very much been on the buy side, providing advisory services to the buy side, which is the whole spectrum of life cycle advisory services in terms of what to source, where to source it, how to manage it. Then very much a vertical focus on governance, which is helping clients figure out how to manage that. So design, support, and run. And then a solution that's a little over 2 years old that's focused on supply, data, analytics, and monitoring, which used to be called Global Supply Risk Monitor and is now being renamed, rebranded as it launches its second version on January 1st to Supply Wisdom. And I will provide you a sneak peek at what that solution is. So let's jump in. Enough about Neo. And let's focus on the topic that's of interest to you today, why you're here on the call today. So let me start by asking you a quick question, and hopefully you'll respond to this. So how many global suppliers do you use today? Is it less than 5, between 5 and 20, or is it more than 20? And so as you vote on it, I will move on to the next question. At this point in time, what we are noticing here is I will close the poll in about 10 seconds. And what we notice is that a third use less than 5 global suppliers, whereas 67%, which is 2/3, have somewhere between 5 to 20, right? So I think we, that gives us a little bit of perspective of a large part of the group has has between 5 and 20, and then a third has less than 5 suppliers. So why this focus on supply risk? We're seeing increased risk simply because the footprint for companies has increased. Number of locations, number of suppliers, that has gone up as they have looked at leveraging sourcing and global talent across not just one business process, but multiple business functions and multiple parts of the business. And as they source more, and not just one-time projects, but ongoing businesses, we're noticing that the risk has gone up. It's much higher. Why? Because the exposure is much higher. And since these are ongoing businesses, if there's any impact on operations, whether that's a strike, weather-related delay, or a change in law, or a legal issue, legislation, or changes in inflation or labor pool, it can have dramatic impact on the stability of the operation. Sometimes it's disruption, other times it's a significant cost or challenges staffing and other such areas. So what we're starting to see is companies recognizing the benefit of being proactive in terms of mitigating risk associated with locations and suppliers. So not only can they mitigate the risk, but often there are opportunities that can be had. So being able to take advantage of these opportunities. So as I go through the rest of this webinar, some of the things I will spend time is talking about how does one make supplier risk both actionable and proactive when you have limited resources? How do you engage internal and external stakeholders? How do you understand what's important to them? And then how do you use risk management to ensure corporate compliance, regulatory compliance, or compliance with board directives? And then how do you turn this risk management into operational success? To me, risk management is not just about a necessary activity. It's about how do you take advantage of opportunities that might occur. And then I'll provide a sneak peek into what we are focusing on and what is the initiative that we have with NEO. That 100+ clients of ours have this as one of their initiatives, and we'll go into greater detail on that. So when we look at managing risk with limited resources, the first thing is, I know it sounds obvious, but starting at the right time before something bad happens, right? This is about planning. And then assessing the right risk. Do you know what your risks are? And it's very clear today that it's more than just whether a supplier will deliver on its service level agreements. It is well beyond that. But do you understand your other risks? The risks such as the labor pool, the size of the labor pool, the condition of the labor pool, the cost of the labor pool, for example, in a market that you may be operating. What are some of the laws that being changed that impact taxes or impact the fact whether labor can be mobile or not? And then monitoring the critical suppliers and locations. What we are seeing is that clients are now segregating or segmenting their location and supplier base by criticality. Criticality of operations, criticality of tasks, criticality of impact. And then identifying for their critical suppliers, who are their subcontractors? More and more companies are realizing that it's not just their own suppliers, but their subcontractors that could disrupt the business where risk occurs. And then building a library. So for example, when currency fluctuates, what actions do you take? When a supplier is having challenges hiring, what actions do you take? When attrition is rising, what action should you take? Not just by yourself, but together. But having this guidance library significantly impacts how well and how quickly one reacts to challenges. Let me jump to the next poll to get some more feedback from you. So how many countries are part of your global delivery from third parties? So when you answer this, please do not include your home country. So how many locations are you getting delivery from third parties? And that third party might be your own in-house center also. So I will put out another about 5 seconds as you complete this poll. So when I look at the audience, what I notice is about 50% have 1 or 2 additional locations, but more than 50% have more than 5 locations. I think this very much when I think about the 100+ clients that we deal with that are monitoring supply risk, which is supply and location risk, I think we see something very similar, which is there is a group which is over 50% does have more than 5 locations where they're getting services from. And then there is another group that is in about 1 or 2 additional locations in their home country. And many times, some of the worries that they might have is areas such as location. Do I have concentration risk, for example? So one of the things we talked about was pick what matters. And so we wanted to provide you some guidance on some of the models that we have created. So we encourage our customers not just to track macroeconomic and financial risk when they look at location, but take a look at geopolitical risk. What kind of disaster risk do they have in the locations where they are? What about infrastructure risk? What is the issue with power, utility, transport, facilities? What about technology readiness? And what is the connectivity quality? Are there business risks? When you're trying to set up another location, what is the licensing issues? What about quality of business networks? We use the word cluster, which is our businesses that help you, like recruiting, training, accounting, legal. Is there an environment where those companies understand this business and they provide support? What about legal risk? Are there legal regulatory issues that are changing? Cybercrime? What about, is there any trade union activity and any key market labor laws that might be coming up? And then what about scale? What is the size of the market? What are the graduation rates? What are other companies coming in that are competing for that labor? And then what is the quality of life? When we start looking at supplier, we encourage our clients to go beyond financial risk, right? We encourage our clients to take a look at risk that is not just about the cash position or the financial stability of that company, but what is the size of their talent? Which talent pool are they recruiting from? Are they improving their focus on quality, security? What kind of governance do they have, right? Do they have ownership concentration? Do they have independent directors? What about attrition? And is that an attractive place for employees to be? What is the utilization productivity? And then so on and so on. So I think you as a company have to think through and say, which risks are important to me that have an impact on my business? And then make sure that you have some of the right risk alert triggers. So once you know your risk, is what kind of alerts should I have? So what should I be knowing that would have an impact on my operation? So if those do occur, I know what action to take. These are just some examples of alerts that went out to our clients when it came to suppliers, and you can see some of the list of that. There were also some regulatory alerts that we send out to many of our insurance and financial services clients, for example. And then what are some of the alerts that went out from a location risk perspective? And you can see right there that many of these are alerts that you would never see in your service level agreement or a contract with your partner, or any understanding that you might have with your global in-house centers. So this is about having a comprehensive view of risk as you think about it. And then making sure you understand your supplier locations, whether this is where your supply is coming from, whether it's with your partner or whether it's your own in-house center. What kind of investments are happening in that location? So Philippines is a good example today of a location that has shown tremendous maturity and growth when it comes to business process outsourcing. Colombia and Mexico have shown tremendous growth when it comes to both voice, which is call centers, but also technology. We're seeing, in terms of digital initiatives, when companies are looking at mobile and digital, we're seeing tremendous skill sets in locations such as Romania in Central Eastern Europe and Argentina in Southern Europe, in South America, I apologize. And then we see many of the Central American regions coming together to work together to provide operations of scale. So how well do you know these operations becomes critical as you think about that. And then how do you engage your stakeholders? Who are the stakeholders, both internal and external, right? And you have to think through line of business, in some companies, risk and compliance, internal audit, finance, IT security, vendor management, sourcing, senior management. And what are the varying needs that they have? What matters to them? And the same goes for external. The board of directors have a different agenda than the regulators compared to the auditors, customers, and suppliers. So while I'm on this topic, one of the questions is, suppliers should really proactively recommend ships within the geographies. However, that is not in the best interest. How do you address that? I think our view is that while suppliers are constantly looking at geography, right? But what we have found that suppliers look at geography when clients push them. So often, when I look at the last 3 years and I think about my conversations with many suppliers, some of the top 20 suppliers, on why they were not more robust in South America, often the comeback was, well, clients are not asking for it. So one thing when it comes to risk, what we start to see is that often these conversations have to be led by clients, right? These conversations are led by clients because clients have a much better understanding of their risk profile, of their risk, than suppliers do. And when clients lead that conversation, because they're much more aware of how risks are changing and what the risks are, suppliers are a lot more responsive. So what we recommend in risk management is when you create these programs, these programs are about monitoring, but they're very much about governance, which is how do you create a dialogue? What dialogue should you have with your partners so that you are collaboratively and proactively addressing risk? And so just as that question asked, really anticipating what each stakeholder needs, right? Where the line of business executives and senior leaders want to understand risks that may disrupt operations, often finance, risk auditors, regulators want to know that a supplier's action will not cause non-compliance, right? So they're much more interested in monitoring, whereas business executives may much more interested in response. And then suppliers want to make sure that any kind of risk assessment or risk monitoring does not require them to spend more money on delivery, right? So this is not about just raising their cost of operations. For us, what we find is often the cost of disruption, the cost of non-compliance, the cost of missing out on opportunities can be much greater. So we look at this from a cost, risk, benefit analysis, and often we find that rightfully done, these programs pay back a return that is anywhere from 2 to 10 times in favor of the clients, in favor of their partners. So before I proceed, let me ask you another question. When you think about risk, what is the primary reason that you are interested or currently monitoring and managing risk in your services supply chain? So think about, are you doing this to avoid service disruptions? Are you doing this to ensure compliance? Or are you doing this to inform contract negotiations? The poll is in progress, and hopefully you'll vote so we can share this with the audience. Often we hear from financial services companies that this is very much about to ensure compliance. And then we hear from companies, I'll by the way close the poll in about 5 seconds. We hear from other companies that have global operations that this is very much about avoiding service disruption. So when we look at our audience today, it might be a little bit skewed to the financial services, insurance services side. There's a greater requirement, and also we see the same thing in healthcare, life sciences to some extent. A greater reason being ensuring compliance, whereas others care about service disruptions, about 3/4 on compliance and 1/4 on service disruptions. So it seems very much in line depending on which industry you're coming from. And it's interesting to note that nobody really answered on contract negotiation. So it's very much about a focus on governance, ongoing vendor management, and making sure staying in compliance. So I think this refers back to the next point that I was going to bring up is in many industries, the increased regulatory demand is really bringing the attention to why there is a need to effectively manage supply risk, to have a need to monitor and proactively respond to both location and supplier risk. And we're seeing this directive in many other companies because of global operations where they may not be as subject to regulations, a focus on ensuring that reputation risk, non-compliance risk, and service supply chain disruption risk be avoided. And then companies that have a lot more maturity in this area, we're finding that they are using this to make sure that they're also taking care or taking advantage of opportunities. So when companies are using suppliers, often the non-negotiable is to remember that just because you use a supplier doesn't release a company from any legal or regulatory requirements. Companies are aware of that. So while they rely on third parties to help manage operations, but they're recognizing that they have a need, they have a requirement to monitor and manage supply risk because they have the legal and regulatory requirement or authority or need. Also, companies recognize the difference between controlling the process and transparency into the process. And what supply monitoring, location monitoring is doing for these companies is they have much greater visibility into the process, into the risk, into the opportunity. And then building these updates, this compliance, this engagement into governance meeting enables them not just to avoid service disruptions, but also stay on top of regulatory and legal changes. And often what we are seeing is these efforts are helping clients then in the future make decisions on who to direct the next piece of sourcing to or what location. So one of the questions that I see is a question around location risk. How important is it to monitor location risk and are companies seeing the benefit from it? I think it goes back to the first question. What we find is often a partner or an in-house center is becoming non-compliant for reasons that are very much location dependent. Right now, for example, in certain markets, we're seeing attrition rates of 20-25%. Why? Because we're seeing tremendous competition for resources that have between 2 and 5 to 7 years of experience because they have been trained, they have experience, and as these companies are adding staff, they would rather hire those people than hire fresh graduates, right? And because those labor pool requirements from a graduation perspective, students, the graduation rates not high enough to meet the capacity requirements of the multiple suppliers and the multiple in-house centers in those markets. So if you are outsourcing to a supplier to some particular location, there's a great benefit in your governance, in your monitoring, to not just focus on service level compliance like attrition, but also to have a discussion around graduation rates, labor pool, who else is in the market who's competing for those resources, what are other companies doing to ensure higher retention, and what action you as a client can be taking. It changes the tone and the content of your compliance meeting and will produce benefits as we see in a number of other companies. Let me ask you one more question, and it's getting to the time when I want to start actually showing you also a live demo. Well, the question really, this one is about regulatory environment, but let me also change this a little bit to say, challenges. So if you're not subject to regulation, think of that as market challenges, other challenges. what do you expect the environment to be for you in 2015? About the same as 2014? You think it's going to be less challenging or more challenging? The polls are open now, and look forward to your feedback. And I see this question often again as industry dependent, and I'll leave the polls open for another 5 seconds. We find definitely that if you're in healthcare, life sciences, financial services, insurance, that there is definitely a higher focus or higher recognition that the regulatory environment is not getting better. The regulators are asking for more transparency, for asking for proactive methods, asking for higher compliance, and I think that's what the poll says here, right? 75% of you expect an increase in regulatory requirements, whereas about a quarter expect the same. So none of you think it's going to be easing. Interesting. So how do we meet all these requirements, right? Well, as we talked about, I wanted to share our risk model. We talked about some of the criteria that you may want to have. Hopefully, you'll take away something from here. When you look at suppliers, look beyond financial to make sure you're looking at the capability development of the partner, what is happening with their client base, their people, thought leadership, alliance, governance, infrastructure. And then when you look at city or country risk, and again, often we find it's just not enough to monitor just the country or vice versa, just the city. It becomes critical to monitor both, because some cases, some issues are city specific. In other cases, the issues may be country specific. So there is a difference between a security issue in Monterrey and a government law that changes immigration or federal tax rates that are much more led from the center. And then risk, of course, depends on tolerance. Some companies have a higher tolerance for risk. So the question is, what risk are you willing to accept? And I think your investments to a large extent will depend on that. And so the risk tolerance has to match the company's overall risk appetite. Obviously today, if you're a bank, your appetite for risk is a lot lower, especially as you look at some of the regulations and some of the requirements from not just OCC, but also other requirements like anti-money laundering, anti-corruption, the Consumer Bureau, and other changes that you are seeing. But one thing we notice, of course, is that the risk tolerance decreases, which is companies are less willing to accept risk when the scope, spend, and access to data increases. But at the same time, we're noticing that risk tolerance can intentionally be improved or raised when they improve governance, transparency, and oversight. So good practices put into place can help a client, can help a company make sure that they're more willing to take risk. So we see this really as an issue of value loss versus value gain, right? How do I gain from putting some of these practices into place, and then what do I lose when I don't do that? And so putting in an enterprise-wide coordination of compliance practices, of risk management, and looking at the above that you see there, contract, financial, relationship, performance, and resource, has a big impact. Before I go on, I want to encourage you again, please ask questions or share comments. I look forward to answering some of your questions or reading some of your comments as we go through the next stage. So please feel free to do that. So without further ado, let me jump into Supply Wisdom and walk you through this tool that we have in place, this tool that we have created that over 100 plus clients are leveraging today, and that we're really excited about sharing this with you. So as I go through this with you, what you'll notice is that this is based entirely in the cloud, and it has in-depth data. Others might refer to this as big data, but it truly has significant data around all the risk elements, the risk criteria that I shared with you. So about 350 different risk criteria that we capture. Each data that we capture has 2 or more sources to enable us to have the truth of that source. We have an alert system, so companies can get real-time alerts on risks that may be changing in their location or in their market. And then guidance. Guidance is based on our expert advice, but also a library of what other companies do when they face that risk. So what I'll do is I'll walk you through this three-tiered solution. What we find is that companies are using their strategic locations and strategic suppliers and often leveraging the manager level service. And then for the rest of their locations and suppliers using the alert level service. And then when they're making sourcing decisions or ad hoc projects, they're using the info solution. So when I walk you through alerts, I'll walk you how the alerts are delivered, what comprises of the alerts, what kind of information is reached out to clients. In info, I'll walk you through some of the data sets that are available. And then in manager, by the way, manager includes all alerts, all info, but also deep insights and guidance, which are delivered in the alerts, but are also delivered on a depth at a quarterly basis. So without further ado, let me jump in and take you through So I'm going to take you to the Supply Wisdom. This portal is going to become live on January 1st, and all our clients that are already subscribers to this will be porting over to this system on January 1st. So if you were a client, the first thing that you would notice when you log in would be an executive dashboard. So again, everything is available in the cloud. It's easily shareable. It's easily downloadable so that you're able to put it into your own presentations or pass it on to other colleagues in your company or use these to have a discussion with your partners. So what you'll notice is that the alerts, info, manager tabs are right at the top. There's also a tab called Ask an Analyst, then resources, pricing, and it says demo here, but if this was a real account, you would see your profile, what targets. So we call a supplier, country, or a city a target. What targets are you subscribed to? And then the profile of your organization. Throughout the site, the methodology is easily available to take a look at. So you can quickly take a look at the methodology and see the risk model and a definition of all the categories. In the dashboard, it's categorized by suppliers, countries, and cities, and it shows the latest quarter at any given point in time. At the very top on your dashboard, you see the alerts for all the targets that you are subscribed to. You're able to scroll through the alerts right here, as you can see, and I'll go into each one of these in detail and walk you through it. Also on this page, you're able to compare your portfolio. So this, remember, we're on the supplier page. So you're right here. What you're seeing is a quick executive snapshot of the risk categories. So you can see total risk, financial, service maturity, governance, people, and then all your supplier base. Again, compared to a best in class. If you wanted to, right here, you could have clicked into any of these suppliers and go into greater detail, and I'll show you that a little bit later. And you're able to do exactly the same thing also with the alerts. So provides you a quick snapshot. The similar page exists for your countries. You can see right here that this client has alerts, right? For the countries it's monitoring: Australia, China, India, Philippines. Same thing you're noticing is a highlight, which is an executive comparison of all their targets. And if I wanted to, I could go deep into each location by clicking on it. And then similarly, the same thing with the cities that this client subscribes to. And it's possible that this client, okay, So this client does not subscribe to any cities. So in the demo, you're not seeing that. So let me go through each and every one of these solutions in greater detail. So let's go into the alert pages first, and let's take a look at the alerts. So one thing you'll notice on the alerts first are ranked in each category, supplier, country, and cities by who you classified as your most important to least important. So your most important would show up first, and so on. When you look at the alerts, you'll notice right away that there's a color category between low, medium, high. So right away you know what is the impact of this alert. Is it a low impact, medium impact, or high impact? And not only are they categorized by what's most important, but within the alert, within the target, they are shown by dates. So you know the most recent alert is your first one. So for example, let's take a look at IBM in their ITO practice. One of the alerts that came out today is IBM reshuffled their senior level people in India. So you'll notice severity level is 0. It gives you detail on what happened, what the takeaway is, and provides you sources, sometimes multiple sources. You'll also notice at the top that you are able to download, right? You notice it downloaded it. You're also able to enter email and share that alert with your colleagues, right? So let's go back and then take a look at some of the other alerts that we see by country. Again, very, very similar. The alerts are categorized by low, medium, high, and then same thing happens in the other categories of location, for example. One of the alerts that went out today, unfortunate incident that I think many of you may have seen in the newspaper today, that started last night, was a possible terrorist attack that fortunately has ended, but unfortunately was challenging. Severity level medium, which is what impact would that have on clients or companies, and gives details what the takeaway is, and then what is the source, and directs companies. Now, important to note that while these alerts are available in the cloud under your subscription, an email would have also gone out to you if you were the client. When the alert is released, an email goes out to you, and you have the ability to receive the PDF in your email itself, or you have the ability to actually go online, and then again, like it said before, you're able to share it, download it, and take action. So the goal of the alert service is to make sure it provides you an early warning service, both reactive and proactive. So enable you to take a look at changes that might be occurring, both risk and opportunity, so you can take action very quickly. And we see clients putting significant part of their supplier base and their location base under the alert service, so they are keeping tabs. And often if they have multiple vendor managers or multiple responsibility depending on location and suppliers, they're subscribing to the alerts and assigning them to be people that it matters. So you don't have to be receiving alerts for every location, every supplier, but just the ones that matter to you. So that's a little bit on the alert service. Let me go into the info service. The info service is very much about details and depth, right? This is about data that's available on all the risk categories that we had talked about: financial, infrastructure, service leadership. Again, depending on whether it's location or whether it's supplier. It provides you a graphical interface and provides you data. And again, just like I showed you in the alerts, you have the ability to download, you have the ability to share. So for example, let's get into a particular supplier. If you're a subscriber to info, what you will notice is you are able to jump into a category and be able to see information. In this case, you're seeing information that is focused on investment risks, so things like market cap, institutional investors, what changes are happening there, what are analysts saying, what's a return on investment, what's a return on asset. Under people risk, you'll notice information such as what is the employee growth year over year? What's happening with attrition, right? You notice Genpact, for example, is facing significant attrition, right? Where is the attrition happening? Is it happening in the fresher, less than 2 years of experience, mid-level, or is it in terms of senior management. Same thing with client size, right? Are they adding clients or are the clients decreasing? Did they add more clients this quarter? And what is happening with client flight? Are clients leaving or is that very stable? So if you notice that the graphic was changing as I was picking that category. So really detailed information that's available to you at this level on your suppliers, your countries, and so very much so, very similar information on the location that you might subscribe to. This is showing you China. And again, you can download or you can share. So when you download, for example, if you notice, it gives you the ability to share only a particular category. So for example, counsel might be interested in just hearing about legal risk, whereas operations might want to know about scalability, quality of life, whereas another risk and compliance group that's focused on economic issues might just want to get the macroeconomic, financial, and geopolitical. So you're able to customize what is it that you want to download, and the same goes for what is it that you want to share. And then the same level of in-depth information exists, right? Whether the category is macroeconomic or others. So you'll notice here, for example, tremendous information that's available to you that helps you make decisions on locations and or suppliers. Now, let me jump onto the manager service. Now, please remember, the manager service is the most comprehensive solution. So in the manager service, you get access to alerts, you get access to information, which is the info product, but you also get manager, which is the ability to compare against best in class, but also a very detailed guidance that's provided, not just in your alerts, but in depth every quarter. And this is where we are seeing our client base taking their strategic locations and their strategic suppliers and using this level of solution. Again, I encourage you to please turn in questions or any comments that you might have as I'm going through this demo of Supply Wisdom. So our clients tell us that what they like about this supply and location monitoring service is how it serves as a monitoring mechanism for them, provides an early warning system, but is providing them a great aid in their ongoing vendor management, location management, and governance meeting. And they're using this as an information mechanism to both educate themselves, their teams, but also keep senior management involved and engaged in terms of what's happening with the risk and opportunities in the locations and suppliers that are important. So in the manager service, you're able to jump directly to a particular risk, as you see right here. You're able to pick what quarters you want to compare and compare against what. And so you are able to jump in and be able to get in-depth information. So I can see very quickly, either in my executive dashboard or by drilling deeper, that my people risk in Genpact climb. So the question is, let's take a look at it and say, okay, why did that climb? Why did my people risk go up in this quarter? So what I'm doing together with you is drilling in. First of all, you can see the observations and key takeaways. What you'll notice, what it says is that the attrition risk is what went up. And so when I click on here and I look into it, what I start to see is that while Genpact is hiring more people on the lower experience side, when I start to look at attrition, I notice that in some categories the attrition has gone up. And in this case, particularly in the 5 to 10 year experience category, and even some at the high level experience category. So when I sit down and have a conversation with my partners at Genpact, if I was on the client side in this case, I would have a conversation about attrition and say, why is it going up and what can we do together to impact that, to change that? So what I might have done in this case is I may have downloaded just this section. For example, shared that with my partner, and said, hey, we need to have a conversation about this. I apologize for that error. It's working fine now. Is have a conversation specifically about that and find out why and what they're doing about it, so that I can engage with them in a dialogue or how to solve that issue. And so very effectively, I'm able to take a look at individual, or as we saw before, I'm able to jump in and take a look at my entire portfolio in one screenshot and able to decide where specifically do I need to focus. So that hopefully walked you through the three products. Let me show you some of the administrative features also. Ask an Analyst is a feature that we often see our clients use. Anytime you have a question on this, clients are very quickly able to ask. So for example, clients are leveraging Genpact might have asked the question, hey, we're seeing our target of Genpact having high attrition. What are you seeing at other BPO companies, right? So Analysts would quickly respond to it. Under resources, you're able to keep an eye on the monitor, which we publish monthly, right? Take a look at a particular region and be able to see what's happening in that region. You also have quick access to any pricing that you're looking at for Alerts Info Manager. And then you're also able to jump in and go into your subscription base and very quickly be able to see what you're subscribing to and what you may want to add. So this is also an area very quickly. For example, when I go to cities, I notice I'm not subscribed to any, that I could add that. And I also notice what my subscription here is for countries. So going back to the benefits of this, when I reflect again back, I think that's one of the questions that's been asked is, when I reflect back on what I'm hearing, definitely from the regulated industries, I'm hearing a need for greater compliance, especially as clients have access to limited resources and can see making an investment in setting up their own teams. The ability to leverage this at a level that's appropriate for the strategic suppliers and at another level that's appropriate for their bigger supply base and location base, to be able to do that by us leveraging a risk methodology that's very comprehensive, has access to tremendous in-depth of information, analytics, and expert guidance, provides them that answer very quickly. So I'm going to pause and just check to see if there's any other questions before I bring up a couple of things, couple of other things that I wanted to talk about. So one of the things that we wanted to offer to the attendees on the call and any of our interested parties is, we know that many of you are looking at plans for 2015, and in fact, many of you are looking at your budgets at this point in time as you work with your partners for next year. So what we wanted to share with you is a special offer that's available to you through January 31st. That if you as a buyer are interested in Supply Wisdom Manager, you can trial 5 targets at no cost, at no additional cost until January 31st. So you can get the access to the full manager level product for 5 targets at no cost until January 31st. And you can cancel without any penalty until January 31st. If you're interested, please send an email to info@supplywisdom.com. info@supplywisdom.com. And with that, I encourage you to please go take a look at supplywisdom.com. As I said, that platform will become live to everybody on January 1st. We are giving clients access to the data, the reports, the alerts, immediately. And so if you're interested in expanding your coverage, or if you have any feedback, any thoughts, any questions, I encourage you to please send an email to info@supplywisdom.com. And I appreciate your time and attention to this webinar today. Thank you very much, and I look forward to being in touch with you. Have a great 2015.